Welcome to Calkine's educational series. Thank you for trusting us with the most reliable content. Let's see the topic for today. Yield curve. Now let's understand what is yield curve. Yield curve is a graphical representation of interest rates or yields on bonds offered on different maturity dates. Yield curves are important tools used to determine the yield on bonds that have the same credit quality but different maturities. A yield curve has interest rates on the x-axis and the maturities on the y-axis. A yield curve can take different shapes depending on the economic cycle. It helps analyze the difference between the short-term and long-term bonds by displaying the yield offered on both. They are usually upward sloping because an investor who is willing to invest in a long-term bond must be compensated with higher yield. Now let's understand what are the different types of yield curves. First, normal yield curve. This is the shape that a yield curve usually takes under regular conditions. In a normal yield curve, short-term bonds offer lower yields while long-term bonds offer higher yields. The short-term bonds are associated with lesser risk, hence the return on these bonds is usually less. Second, steep curve. A steep yield curve represents that yield on long-term bonds is increasing at a faster rate than that on the short-term bonds. This type of curve is based on the similar market setup as the normal yield curves. Third, inverted curve. This curve represents a higher yield on short-term bonds and a lesser yield on long-term bonds. This type of yield curve occurs due to the perception of the investors, that is, when they expect that yield would decline in the longer term. Fourth, flat yield curve or humped yield curve. When the normal yield curve transitions into an inverted yield curve, it must pass through a phase where the curve is flat. This is the time when short-term rates are almost equal to the longer-term rates. Thus, the shape of the curve appears to be as flat as both types of maturities fetch the same amount of interest. Well, that's all for now. For more such educational tips, please visit our website calkinemedia.com and do subscribe to our YouTube channel. Till then, stay apprised and invest wise with Calkine, your best guide.